We're rolling into the early afternoon session, and markets are still wrestling with the same two forces. A Federal Reserve that's not fully convinced inflation is tamed, and an AI trade that's starting to look a little tired around the edges. I'm Grant Mercer, this is Storm Stock Solutions, and we're here to bring some clarity through the chaos of today's tape. Since the last hour, the macro backdrop hasn't changed, but it has sunken a bit more. According to reporting from MarkWatch's Jeffrey Bartash, two Fed officials who dissented from the most recent interest rate cut are reiterating that inflation remains too high, and that the central bank may have moved before seeing the full run off delayed data on prices and jobs. That's not the dominant Fed view, but even a minority voice like this can nudge expectations. Traders are recalibrating how aggressive they think the Fed can be with cuts next year, which can put some pressure on rate-sensitive names and temper the more speculative, risk-on behavior we've seen. On the equity side, the AI narrative is evolving from everything goes up to what actually has staying power into 2026. A new piece from Philip Van Dorn at MarketWatch is getting attention for looking at stocks that could work next year as the AI trade comes under pressure. The focus there is shifting toward quality, balance sheets, earnings visibility, and realistic AI-driven cash flows, rather than just chasing whatever has the word AI in its investor deck. That gives traders and longer-term investors alike a framework for where leadership might rotate if the hottest AI names keep cooling. At the same time, Christine G's earlier reporting on Alphabet and Amazon is still very much in play as a quieter, under-the-radar theme this hour. JP Morgan is arguing these two are especially well-positioned to turn AI spending into real return on investment through cloud, AD tech, and e-commerce efficiencies. That doesn't mean they're calls to buy, but it does highlight that within a shaky AI complex, the market may favor platforms that can monetize AI across multiple businesses rather than single product stories. We've also got some stock-specific drama hitting the retail space. According to Claudia Assis and Tommy Kilgore, Lululemon has ousted its CEO after a tumultuous year, and that move is drawing praise from activist founder Chip Wilson. Anytime you see a leadership shakeup at a well-known consumer brand, professionals immediately think about strategic pivots, merchandising, store growth plans, and cost discipline. The market tends to treat these as show-me stories. The stock can pop on headlines, but the durability of the move comes down to what the new leadership actually delivers over the next few quarters. In the background, there are a few stories that might not move the indices today, but are worth having on a watch list. The orbital eye angle remains one of them. Jamie Chisholm at MarketWatch lays out how Jeff Bezos and Elon Musk are targeting AI through space. Essentially, satellites and space infrastructure to handle the data demands of next-generation AI. If capital really starts to flow there, traders may eventually look down the stack at launch providers, satellite operators, and ground networks that tie into those constellations. For now, it's more long-term theme than short-term trade, but it's one I'm keeping in the back of my mind. Another under-the-radar thread is personal finance and retirement behavior at the end of the year. Quentin Fottrell's piece on a 61-year-old worker debating whether to retire and downsize is anecdotal, but it speaks to a broader dynamic. People feeling job stress, watching their 401k balances, and thinking about healthcare costs. That feeds into how money moves between risk assets and safer income strategies as we head into 2026, and it can shape flows into everything from dividend stocks to treasuries. From here into the next hour, I'll be watching how sensitive growth sectors trade as those Fed dissent headlines make their way through the bond market, and whether AI-related names see more of that quiet rotation toward perceived quality and away from the highest flyers. Lululemon and the broader retail group will also be on the radar to see if this CEO move sparks any sympathy action across the sector. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady,